All right, let's have some fun today. If you're like most homeowners, you've probably wondered at some point, should I refinance right now or should I just wait? The truth is, refinancing isn't a one-size-fits-all decision. It really comes down to your specific goals, and today I want to walk you through how I help clients break that down so you can see what makes sense for you. You know, when I talk to clients, the very first question I ask is simple. What's the main reason you're even considering a refinance at this point? For some, it's lowering the monthly payment, freeing up cash each month. For others, it's shortening the term, shaving years off the mortgage and building equity faster and reducing interest. You know, sometimes it's pulling out equity to remodel, pay for college, or cover unexpected expenses. And in some cases, it's consolidating higher interest debt like credit cards or personal loans into something more manageable. So the first step is always defining that why. What's driving the idea in the first place? Now, here's where I see people get stuck. A lot of folks think refinancing only makes sense if rates drop by 1 to 2%. They got this idea in their head. But the reality is that's outdated advice. Sometimes it's less about the headline rate and more about the structure of their loan. Think about it. Another common concern. People say, well, if I refinance, I'm just resetting the clock for 30 years again. Not so fast, right? You can choose shorter terms or structure the loan to line up with your payoff goals. And finally, some just assume it's too much of a hassle. But when you compare a little short-term paperwork, literally, to years of savings, it often flips this equation. Let me give you a few examples of how this plays out. I worked with a client, John, who dropped his monthly payment by $400 a month. He didn't just pocket the money, he redirected it straight into a savings account for his kids' college funds. Smart move, right? That's one decision reshaped his whole financial future. Another client, Sarah, who I recently worked with, chose to shorten her term. She went from a 30-year mortgage to a 20-year term. She shaved 10 years off her payoff schedule and ended up saving 6 figures in interest over the life of their loan. Is that not a benefit? And then there was Mark. He had multiple credit cards at nearly 15 to 20% interest. Ridiculous, right? By consolidating that debt into his mortgage, he freed up hundreds every single month, money that no longer went to high interest payments, but back into his family's budget. Those are 3 very different situations. But what is the common thread? Each refinance was tailored to their specific needs. Here's the thing. Every month you wait, you're either paying more interest than you need to or missing out on savings that you could be going towards your future. Think of it this way. What's the cost of waiting another 6 months, another year? How is it benefiting you? That money isn't going to come back. The market doesn't send you a refund for paying more than you had to. Sorry, it doesn't work that way. So the real question is, what is the opportunity cost of staying in your current loan versus exploring what's possible now? Why are you waiting? If you're curious what refinancing might look like for you, drop the word refinance in the comments or just send me a quick message. I'll send you my guide, The Rules of Refinancing. It's a simple breakdown of what to know before you make any decisions. Talk to you later.